Things have gotten worse for Binance today, and it doesn't look good. Hey everyone, meet Kevin here. Yesterday, I covered a Binance interview, a CNBC Binance CEO interview, where the CEO, let's just say, had some embarrassing moments. In addition to refusing and dodging the question about whether or not they have ever used customer funds to make investments, like potentially a $5 million investment into Twitter, where did they get that money from? And refusing to acknowledge that if they have so much money, they say they have $62 billion of assets, why then are they unable to commit that if they needed to make a $2.1 billion payment, they had sufficient liquidity to do so? Now, of course, anytime a negative piece comes out on Binance, there's an army of Binance bots that I think are just scripts that come out to suggest that either the interviewer or the person covering the story has bias or whatever. Even though when you just look at the interview yourself, it's like, why is the CEO being so dodgy? It should be simple to say, no, we don't use customer funds, but they don't do that. It's also really odd when we hear the CEO say, oh, we don't owe anybody money. We don't owe any company money. We don't have loans. And then in the same interview, the CEO says, yeah, we're working on doing an accounting of our liabilities. This is quite odd. But it's no surprise that after yesterday's disastrous interview, what happened today? Well, I'm going to reveal that right after giving you a bit of context. So there's this French accounting firm called Mazar. They're an accounting firm that actually does the accounting for companies like Crypto.com, KuCoin, and Binance. And when I say accounting, I want to be clear. They do what's known as a proof of reserves disclosure accounting. This is basically something that just shows how many assets they have. It's not really a full audit. And even though all of these companies are like, oh, don't worry, one day we'll do a full audit, nobody in this tough environment wants to do a full audit right now, probably because they're worried about being really exposed. We also really question how much revenue these companies are able to bring in right now, since crypto volumes have substantially collapsed. And so this creates a concern that if their revenues at crypto companies are collapsing, and potentially they are somehow through loopholes or otherwise leveraged, because like the CEO says, oh, they don't owe somebody money, but they have leverage. Okay, so you do have liabilities, but you don't owe somebody money. Maybe you're pledging customer assets, and so technically you don't have a loan, but you're borrowing money by pledging customer assets. So it's actually your customers' assets who have the liability against them, and you're using that to go make other investments, whether it's in crypto, venture capital, or speculative investments, to create a yield for yourself. We don't know. And the scary thing about the crypto industry is just that. It's one that says it's transparent, but then when companies or people request audits, the crypto exchanges say, no. We just do proof of reserves. We'll just tell you how many assets we have. We won't tell you how many liabilities we have. Take a listen. Now that you know a little bit about Mazar, the French firm that does these sort of proof of reserves accounting or disclosure reports, listen to the reference from CNBC yesterday about Mazar, and then I'm going to give you the update of what happened today.
But even the audit that you're not, I shouldn't call it an audit, even the disclosure that you're doing with Mazar is not, I mean, you're setting the rules for this. It's not a real audit. You're telling them what you'll share, and you're kind of setting up, they wouldn't call it an audit.
So what happened with Mazar today? Well, today, Mazar quit. Literally. The one company CNBC references as the one company providing any kind of disclosure into Binance, which we know is also a company that works for Crypto.com and KuCoin, has decided they're quitting. This French firm is quitting because of indications that markets haven't been reassured by the proof of reserves reports they have published thus far, and therefore they're quitting the entire crypto industry. It just makes you scratch your head and wonder, are things that bad in the crypto industry that the one company doing proof of reserves reporting has now quit? Of course, many folks in the comments section say, CZ and the CEO of Binance is an OG. Oh, he doesn't have to answer questions. Oh, the questions that are being asked are Binance. Oh, somebody or biased, not biased, Binance bias, whatever, or biased. Oh, somebody reporting on the issue is not fair to say anything bad about Binance because they're perfect. Like the amount of those sorts of comments are at bot levels. It's really weird. And when I look at my YouTube analytics, I see at a certain timestamp these interesting spikes in externally sourced views. And they're views that on average have about a 20 to 30% shorter view duration. So I wonder if my videos on Binance or certain videos catch on and then somebody like turns on the bots and all of a sudden we get these external viewerships that aren't actually watching the video as much as normal viewers are, potentially humans, and they're just leaving spam or hate to try to manipulate the audience's view, the public perception that, the creators are wrong, the media's wrong, the interviewers are biased, when the reality is maybe we're onto something. I'm a big believer in when there's smoke, there's fire. And it's not to say that Binance for sure is going down, but let me just put it this way. There's a famous saying in crypto that we've all become very used to, and it's very simple. It's not your keys, not your crypto. And I think the best recommendation in the crypto world right now is get off exchanges. We've been saying this since before FTX collapsed. Been saying this since before Voyager collapsed. The amount of warnings on the channel have always been get off exchanges. Use the exchanges to buy, but get off soon and stay away from stablecoins because that means you're stuck on exchanges and sometimes you're locked up. Like Crypto.com locks you up for potentially 3-month increments in stablecoins. And now while that's nice to be able to farm that sort of yield, it might make a lot more sense to farm yield on treasuries sitting at 3.5% to 4% right now than it might, which you could, farm yield at treasurydirect.gov. And then of course you're going to get a bunch of bot comments that are like, yeah, government bond shill. It's like, let's see, risk-free asset fully accounted for versus crypto exchange that just lost an accounting firm and they're leaving the entire crypto industry when their only job was to tell people what the assets were, which is also misleading in the first place. Proof of reserves, nonsense. We got to know what liabilities are. We got to know what the leverage is. You just can't trust it otherwise. And so it's really, really scary to see the amount of backlash that is sort of being programmed in social media commentary in comment sections. But I strongly believe the vast majority of those saying, this is just FUD, or just bots manipulating markets. So be very, very careful. And look, I wish you the best out there. Not your keys, not your crypto, but it's definitely a scary moment when you see Mazars, the one firm doing this, quitting KuCoin, Binance, and Crypto.com. Good luck out there.